What is going on, investors? Back again. Time to take a look at Zoom Video Communications, ticker symbol a ZM. They just reported earnings today just after the bell. They came in pretty good. Pretty good. Up 366% year over year on the revenue side. The guidance came in, I guess, maybe a little lighter than what shareholders were expecting. The stock is selling off just slightly in the after hours, down about 5%. So we'll jump into the numbers. I'll take you through really just the revenue and profit. Quite frankly, the balance sheet's spectacular. They got 1.8 billion in cash, and in total liabilities, they have 1.5. So to be honest with you, there's really not a whole lot to see there. So we'll just run through the revenue, and then we'll take a look at cash flows really quick, and then finally we'll jump into the stock chart. So like I said, the Zoom Video, $136 billion valuation, a nice, just a light 610 PE ratio. So wrap your head around that one, although they are growing rapidly. We see Q4 revenues between 806 and 811 million. We just had revenues of, call it, about 778. And so, coming in nicely into the next Q4, I think investors are now looking into next year. What's the visibility like into that? And maybe on the conference call, you'll see some of that. See shares dropping about 5-6%. Although, take a look at this. They have more than 10 employees, totaled 433,000 customers. That's up 485% year over year. Take a look at the number of customers contributing more than $100,000. Okay, that increased 136% year over year. You have almost 1,300 businesses that are contributing more than $100,000. That's like $10,000 a month in terms of revenue that they're paying Zoom. So obviously people see that, or businesses see that this is a very viable product when you have these large customers in there. So that's some of the top line stuff or some of the press release stuff. Let's jump into the numbers, see what we see here. Obviously, just spectacular growth. And I think investors are starting to wonder, like, is 2021 like fiscal year? It's fiscal year 2022 for Zoom, but in 2021, the year 2021, how is that going to compare? Because take a look, we had 167 and we went all the way up to 777. So that's just explosive growth. And at some point, you got to figure that's going to flatten out. For the 9-month, we went from 434 million up to 1.8 billion dollars. Just a perfect storm. This technology obviously was needed, and it's a great solution, but obviously you had the pandemic and things like that really impact this. Cost of revenue, we see here we spent 30 million. Yeah, we spent 30 million to make 166. Here we spent 259-ish to make 777. Those are just really, really strong margins. See this? You made $518 million off $777 million worth of revenue. Boy, those are just phenomenal margins. We see for the full year off of $1.7 billion in revenue, we went $1.2 billion in gross profit. That is just phenomenal. This is why, revenue growth is one thing, but then to have gross profits grow like this and just have it be a super profitable business from a gross perspective is just why investors come in and just salivate over stocks like this. We see all our other costs here: research and development, sales and marketing, general and administrative. And then we have a total line here. I'd like to see them do a little line there, but we see these are growing too. Okay. Our top line's growing rapidly. These are growing pretty rapidly too, although not too bad. We see our total operating expenses went from 137 and they basically tripled, okay? So, when your top line is tripling and your expenses are almost tripling, not quite, it's not actually quite a triple, that's actually pretty good. And when we come down here to net income, we actually see we went from 2.2 million up to 198 million. So things are flowing down to the bottom line here because they are scaling this business up nicely. We see for the 9-month ended, we went from about a $10 million net income all the way up to $411 million worth of net income. Now, again, this company has a $136 billion valuation. And so you could bolt on maybe another 200 million here and you're at 600 million net income and you're paying, a massive valuation for that. So obviously going into next year, you're going to need to see accelerating growth. We're not necessarily going to see 300% growth on the bottom and top line, but you'd like to see probably 100% top line growth for this stock to maintain the kind of elevation and the kind of momentum that it has. We see here you're getting diluted a little bit, went from 219 up to 282 in terms of share count. Not too bad, though. That's really not that bad. So cash flows, here's our cash flows here. We pulled down that net income number that we made, about 200 million. We see it's 411 for the 9 months. So they accelerated this net income. Well, you can annualize or 9 month this out times this by 3, you're close to 600 million. So if they can continue that, then yes, they can get to close to $1 billion run rate on terms of net income. I think that would be great for the valuation. We see here from a positive cash flow, net cash flows provided by operating activities, we see we actually get to a 411 number down here. That's actually what we made roughly for our 9 months in terms of net income. So for a quarter, positive net income of $411 million. That is obviously fueled by a ton of stock-based compensation. You also have some deferred cost here as well. So a lot of costs being backed into this, and so you get really strong cash flows as well. You went from 61 to 411. For the 9 month, you went from 115 up to $1 billion. So just super, super solid. Everything else looks pretty good. Nothing totally out of line here. Let's just jump over the stock chart. I'm not going to waste your guys' time here today. So we got the stock trading right at the top of the range. I drew these lines in. We had this bottom line in last time we looked at Zoom video about 3 months ago. I'd say about 380 is kind of the lower end of this range. Obviously, you see it provided some support here. Stock kind of bounced up here, up at this upper level. In this upper level here where the stock is basically right now at, we'll call it about 460. So anywhere between 380 and 460. If you like this stock, you think it's going to continue, you think even as business gets back to normal at some point, maybe next year or into 2022, people are still going to use Zoom. It's still going to be a widely used product. Well, then, you know, inside this valuation, 380 to 460, I'm not saying the valuation is great, but the stock chart kind of says this is where buyers step in. I am not 100% sold that this will continue to be a darling stock, okay? I understand that this year was the perfect storm for them. It created a lot of business opportunity, a lot of need for the product. Will that need be there in another year or 2 years? And whether or not it matters, if you're in this for the shorter term, then obviously I would pay more attention to the stock chart, see where the demand is here for shares. Again, we're kind of on a shorter time frame. I'm on a daily time frame. If you zoom this out, it's a little bit harder, you know, because the stock is just rocketed up. There's a little bit more demand down here at 250, but I know that's a long way. I mean, that's $200 lower than where the shares are now. So, you know, at that point, the whole story behind Zoom and probably the health situation and things like that would be totally different if this stock retraces all the way back down into here. But in my opinion, this is not a bad one if you like the story going forward. If you're like me and you're kind of wondering what's going to happen with this as business gets back to normal, as these customers may or may not need this product, you know, it wonders if this $130+ billion valuation is really justified based on future growth or just on where we're at today. Quite frankly, it's too big of a question mark for my taste. I certainly would love to hear from you. Leave me a comment down in the video below and let me know what you think about this one. Obviously, if you bought it down at 100 or under $100, gosh, I mean, you've had such a great run. I might put a stop loss under that 360 level just because if it breaks this 360 level, there's just not a lot here, not a lot of price action here, just kind of some up errors. Obviously, there'd be some stops along the way, 350, 300, but you know, in my opinion, you break this 360 level and it'd be kind of a critical level. That's why if it retraced back down into this lower 360 level, probably wouldn't be jumping in with both feet, but that's personally where I would look to accumulate some shares inside this box here if you think this uptrend is going to continue, if you think the business momentum is going to carry you into next year. So here we go. That's Zoom video. We'll see what happens going forward. This is one I really look forward to watching. It's pulled back a little bit in after hours, but it's kind of clawed that back a little bit. Stocks have just really gotten ahead of themselves over the last few weeks. So if all stocks take a breather here over the next few weeks, wouldn't necessarily be shocked to see that. This is really a question on going forward, what's going to happen with Zoom Video's business as things get back to normal, at some point. So there we go. That's Zoom video. Hopefully you guys enjoyed yourself with this one. We'll be back again soon. Good luck with your investments.